yours.
Thanks, Todd. Welcome everybody listening. As Todd said, I think that, we're all feeling a bit fearful, unsecure at the moment. And I hope that if nothing else, that Hunter and I can provide today is a little bit of information that may make you feel a little bit more comfortable with what all is going on out there, and hopefully how to proceed over the coming months until you guys get back into full swing. Before we get into our slides, though, I want to thank Todd and Mark and Scott and everybody at AO for having us on today. Just so you guys are aware, our relationship with American Orthodontics goes back for years now. We were fortunate enough to bring them on as our, bracket supplier and orthodontic partner. What I can say through being able to travel with these guys and do a couple, study clubs with them, and they come to our annual meetings, is that they truly care about private practice orthodontists, and so do we. And I hope that you guys know through our resources and through this webinar today that whether you're our client or not, we want what is best for the orthodontic industry. So, all right, Hunter, any other thoughts before we jump into the slides?
No, great to be here.
Great. There's a disclosure that you guys can all read, but I think we'll just jump right into the content here. This is a slide that takes into account right now that we have so much going on. You guys all have so many concerns and thoughts about what's going on with your staff and what's going on with your practice, what your competition's doing maybe, what's going on with this virus. And then there's so much that you're hearing from many different sources, whether it be dental societies, your friends, CPAs, your, everything else like that. And what we've told our clients is as best as possible, we really recommend that you try to turn off all of the noise as much as you can, and try to concentrate on, what we're showing here on this slide as the convergence of, what actually matters right now during this time, and then what actually you can control. And the area that those two converge are really the things that you should focus on. And so, today we're going to talk a lot about the legislation that has come down, and also, ways that we think that you can help your own cash flow and make it through this, next period of time with your practice and your family. But there are a lot of things in the act that really don't matter right now. And so we're really going to focus on what we believe matters to you right now and the things that you can actually take control of in your life and in your practice. So don't want to waste your time. So I say we just jump right in. Okay, so going back to a couple weeks ago when things really started to ramp up in the government, we saw what you guys saw coming, and our recommended course of action very early on was to lay off / furlough / terminate the employees of the practice. And the reason for that was primarily because, we were seeing our practices basically being forced to be shut down. And we did not want to waste the cash flow of our business owners on employee wages when they could get benefits elsewhere. That's a hard and emotional decision. And it has been for many of our clients, and I know it is for many of you. But, one thing that I've always encouraged my clients to think about is that it's a hard decision because these are the people that make your business go, and we understand that. And we have clients that have staff members that have been with them for 20 plus years, many even much longer than that. But your primary job, in our opinion, is to make sure that you have as viable of a business for them to come back to when this thing starts rolling again, and try to concern yourself less with the short term. And we recommended this. We were steady with this even before the CARES Act came through. Now, secondarily, there are some things with all of that. And if you lay off your employees and you lay off your staff, many of you have group health insurance. And so that was something that many of you had to deal with. And most of our clients, we recommend you talk to your broker. But the feedback that we're getting from most brokers out there is that there's a 60 or 90-day period where they're not going to be auditing these, and if you're furloughing your staff, they're going to grant you grace during that period, so that even though you're technically terminating your staff, you don't have to roll them off of your group plan and onto COBRA, which would be a pain not only for you and your staff, it would be a pain for them as well. Okay. Questions that came up about moving staff to unemployment. A big one is if you have salaried employees. Well, what do you do to salaried employees? And the best answer there is to, if you have salaried employees, move them to an hourly basis based on the average number of hours they work in a year. And then if those salary people are coming back, you just pay them hourly for the time being. You do still pay your staff as W-2 employees. If they're on unemployment and they come back and work, 5 hours a week, whatever, you pay them through payroll like you always had on the same schedule as everything. And then those employees will report to the state how many hours they worked within that period. And that may affect their state benefits. And here in a second, we're going to talk about a federal benefit they're going to get. One thing that I've talked to a lot of my clients about that I think is an important question is, well, how do I choose? How do I choose who's going to come back? If I have 4 hours a day or 2 days a week that I'm going to keep open so I can keep up with, the demands and the calls, how do I choose that? And I think that my first answer is, if there is a key employee that's going to be the very best at doing that and make that much of a difference, then consider choosing that person for the hours. But in light also of the federal unemployment benefit, it may also be better and more fair to split those hours out and have, one person coming one day, one person coming another day, et cetera, et cetera. Another idea that one of our planners had is that they were doing over this period of time is, if you have enough staff, they were having an A team and a B team, and they were going to either rotate every 1 week or every 2 weeks for multiple reasons. In 1 week they would have less hours and get the full state benefit, and the next week when they're off, when they're on, they may have a few more hours and maybe their state benefit is depleted. But the other reason that they thought about that was because they wanted to keep staff isolated from each other, so that, hey, if one group of staff ended up having an infection, then they potentially had more staff that weren't. So if you think that's smart, that could be an idea as well. For associate doctors, if they are your employees, then they can absolutely go to unemployment as well. If they are a 1099, then it is unlikely they will be under your unemployment, and they will need to decide basically what type of entity, if they are in an entity, whether they can qualify for unemployment under their own entity. The other thing that we're recommending, I'm going to talk about this a little bit more when we wrap up, is that we believe that it's very important to stay in contact with your employees during this time. You don't want them to feel so far away. So if you do have staff members that are not coming in for a few hours a week, then it may be beneficial to have Zoom meetings. It's probably good for you guys too to have other people to talk to, but have Zoom meetings, do fun things with your staff. And then as soon as we possibly can, in your specific area, once we know a plan for when it may be possible for you to return to work, you're obviously going to be communicating that with both your staff and your patients, and be ready to get this thing rolling again. Okay. Now, Going specifically, kind of talking about unemployment theoretically, let's talk a little bit about what happened with the CARES Act. And we're going to talk about all of the loans and everything else involved in the CARES Act. But one of the big pieces of the CARES Act that specifically affects you and your employees is the expansion of unemployment. And so what they did as part of the CARES Act is they said, state unemployment, every state has their own unemployment. I would say that, based on what I've seen, benefits range from as low as, maximum of 275 all the way up to 775 in the Pacific Northwest. The state benefit is going to remain the same. So each week, if the employee works, the state's going to do their calculation and say, you get this amount from the state. But through the CARES Act, they've added $600 per week per every unemployed individual. Furthermore, that unemployment is retroactive all the way back to January 27th of this year. So, obviously we all know that different parts of the country were affected very differently at different times. And so if you were in a part of the country that was affected all the way back to February 15th and your staff got on unemployment at that time, then they can actually receive or will actually receive a payment for $600 per week for every week they were on unemployment. And that expanded unemployment lasts through the end of July of this year. Okay, so what that means, or what I believe that means for our staff is that we do not have to have the emotional burden of feeling like your employees will not be taken care of if you're not giving them hours they don't need, because this is going to be in most states the equivalent of a maximum. Anybody making $44,000 to $60,000 or less is going to receive the same amount, if not maybe a little bit more than they were working or than they were making when they were working for you. One concern that we've heard a lot from people is, well, if a staff member of mine is actually making a little bit more on unemployment, what reason do they have to come back to work? What, am I going to call them up in June 1 and say, all right, here we go, we're getting ready to go. And they're going to go, I got 2 months left of this expanded unemployment. I don't want to work for you. And my first response to that is, well, if that's the kind of attitude they have, then, maybe they can be on long-term unemployment. But that goes back also to staying in contact with your employees, letting them know what's going on. But also remember that if you offer employment to an individual and they refuse to come back because they're enjoying unemployment, then technically they don't qualify for unemployment anymore. Because part of the whole gig of unemployment is that you have to be looking for a job and not able to find one. So technically, that is not even a possibility under the law for them to do that. And again, most states offer some level of employment of work without even affecting the amount you get from the state. In Texas, you can get up to 25% of your unemployment benefit without it affecting it. But if they go over that a little bit and it's slightly affected, remember, they're still getting paid from you. They're still getting something from the state, and they're still getting something from the federal government. The last thing I want to cover before we jump into all of the loans that may benefit you guys is a question that we are receiving from many of our doctors, and that is, okay, can I file for unemployment? And the answer is yes. If you are an employee of your own entity and you have not exempted yourself from paying unemployment tax, which some people have, but if you have not exempted yourself from that, then you can file for unemployment and you can receive both the state and federal benefit. That goes for you and your spouse if you are paying a spouse out of your practice. I can tell you that we have heard back and that we have had many doctors that have been successful, but I've also heard from a handful of clients in different states where there is a business owner exemption and they are not getting that benefit. So I do think that is on a case-by-case basis as to whether Number one, are you eligible? Meaning, did you pay unemployment tax on yourself? And number two, will your state approve you for unemployment? But if you have been paying unemployment on yourself, you have every right to go and try. Okay. So I think that kind of covers the, what our recommendation has been from the beginning as far as staff goes. That was even supported more once the CARES Act came out. And now I want to jump into the Paycheck Protection Loan Plan, the PPP loans. And I know all of you have been receiving all kinds of emails about that. So I'm going to kick it over to my partner, Hunter, to walk us through that. Hunter?
Yeah, thanks, Judson. We've already gotten some really good questions on the unemployment thing. So let me just clarify a few things that we do know. First, it's very important to understand that these are state-specific situations. So your state may allow the doctor to file. They may not. There may be requirements that they have to look for work. There may not. I know you guys are all dealing with trying to call your local workforce commission office and not getting through. We understand that pain. And so what I would say is that they're very highly state dependent on whether or not you can. Is it reduced? Is it not? Can the doctor file? Can he not? Can she not? And so what I would say is I would really recommend just doing what you can to make sure that you file in the state if you've been paying that, to Judson's point. What we do know on the federal benefit thus far is, and that's actually a part of the CARES Act itself, is that pandemic $600 benefit. There are a couple questions. Is it reduced for partial time? The law as currently structured, we've not received further guidance yet. And I've talked to multiple states that still also do not have guidance on what this is going to look like. All the law states is that if you have if you are receiving unemployment of any amount from a state, then you are eligible for the additional $600. And so it does not look like, at least right now, until we get further guidance from outside of Congress, it does not look like that's going to be reduced necessarily. Again, we need more guidance on that, but that's sort of where it's at right now. Yes, it does get a question. Yes, it does go back to Jan 27. Yes, it does go all the way through the 31st, but you have to have been receiving unemployment during that retroactive period. So if you have an employee that you were paying back in February, they're not going to get the 600. It's only for times where they're receiving an unemployment benefit. So just wanted to clarify that. So tons of questions, obviously, on the PPP loans, and we want to dive into that. We've got a lot of information already out. We're trying to get information out as quickly as we can, but we want to make sure it's also accurate. So on our blog, canewaters.com/COVID-19, we have a lot of information that you can go and grab. The great thing about this is we're live and we have new information today. And so we're going to share some of that information, and we are awaiting a whole new batch of information that actually may be dropping right now as we talk. So it's important when you look at the PPP loan to understand a couple things. Number one, Congress writes bills, but they don't interpret what they're actually going to look like. So the bill has very concrete language in it, which we'll go through here in just a second. But then you've got the Department of Treasury, you've got the Department of Labor, you have the Small Business Administration, who is going to be the one that administers these loans. You have those groups that actually issue the guidance that answers a lot of the questions that you probably have. And we have to wait on that guidance. So we're going to talk about some of the things that we do know. The SBA guidance is supposed to be dropping today. It will go to the banks, and then that will give some more information on what this process is going to look like. We received the Treasury guidance on a couple nights ago. We recorded a webinar already on that, and I'm going to give you some new information on that today as well. So again, important to understand the distinction between the bill being passed by Congress and interpreted by the different organizations that will interpret that. The important part of this loan is we've got to make sure that we pull it apart into two pieces. Section 1102 of the law, the CARES Act itself, Section 1102 actually discusses the actual loan creation. And I'm going to talk about that in just a second. Section 1106 of the law discusses the forgiveness of the loan itself. And we've got to remove those two because there's a lot of misinformation out there because the language is different in each section. So you need to understand, making sure that the source that you're going to is reading the final law and is distinguishing between the two sections. So what does 1102 tell us? 1102 says is that we're going to have these new SBA loans They are going to be under the traditional 7A process or program through the SBA, but they are going to be express loans. So that application is already out. It's only 4 pages. Some of you may have seen it. And so it's only 4 pages. These loans are intended to fund through conventional lenders, unlike the EIDL loan, which we'll go through here in just a second. These are going to fund through traditional conventional lenders under the 7A program. They're 100% guaranteed by the federal government. So this is going to be at your local branch, wherever you may bank is going to have this as an option, okay? They are only for employers under 500. That's something that we know for sure as well. Now, we received the guidance again just about 36 hours ago. The program will be available beginning April 3rd, tomorrow. Now, I'm going to qualify that in just a second. That is the April 3rd date is only for small businesses and then sole proprietors. Self-employed is going to be next week, okay? So if you're self-employed on a 1099, that's going to be next week when your loans will be available, okay? It was funded with around $350 billion, and we're going to talk about what that looks like and how quickly that may go as well, okay? Now, just because the application process opens tomorrow, we have spoken continuously throughout this with many SBA lenders, some of the largest in the country. And at this time, they are saying we are not processing loans starting tomorrow. You can send your application to us. We're not processing loans. Why? We do not have the guidance from the SBA. Even if the SBA guidance drops today, which is expected, being able to interpret that guidance by tomorrow is going to be very difficult. What will that guidance state? Number one, how's the loan going to be calculated? We're going to talk about that in a second. Because the CARES Act defines that loosely, but it doesn't tell the banks how to actually interpret that. So that's the SBA's job. Number two, well, how do you process these loans? How do you go through the network and paperwork of stuff that you've got to go through in order to process it? And then number three, something that was in the CARES Act and also in the Treasury guidance as well, the loans are, from the forgiveness standpoint, the banks are going to be required to sign off on that. So the banks are going to wait for guidance on, well, what does that look like? How do we forgive that? So they are available tomorrow. That does not mean that you will be able to get one tomorrow or even on Monday. It'll depend on the bank and how they feel about the guidance that they receive. Now, how does a loan calculate? In 1102, we know that the loan calculates as follows. It's the maximum loan amount is 2.5 times your payroll cost, okay? Now, the way the law is structured, and we're still waiting for interpretation on this from the SBA, but the way the law is structured is payroll cost is defined as gross wages. So that includes vacations, sick pay that you might pay your team, et cetera, et cetera, et cetera. That is the payroll cost number. It's gross wages. And then in addition to that, you can add health insurance and then also any employer retirement benefits. So 401k, profit sharing plans, defined benefit plans, things like that. Now that's all it says. And we do not know what you will be required to show in order to obtain the loan itself. All it says is it's a maximum, or it's your payroll cost, salaries, health insurance, and employer retirement benefits. Now, it is limited to $100,000 for any one person. So if you're a doctor out here that pays yourself $200,000 and you also have a health insurance benefit and a retirement benefit, the way the law reads right now, you're going to be capped at $100,000 on your salary. And then you're going to be then you'll have your insurance and your pension. That doesn't mean that the SBA won't come out and say, okay, really the $100,000 is going to encompass all of those three. We just don't know that yet. So we'll have to sit tight and wait for that. So once you package this all together, so the 1102, flip back for a second, the 1102 loan itself, the formation of the loan, that is the monthly payroll cost. So again, what happens is you add your annual amount up, divide by 12, and multiply by 2.5. Now, there's a lot of confusion on that. If you have questions, you can, on our blog, we have published a calculator that you can go in and input your numbers and get an answer as to, well, how much will my loan actually be, okay? That gives you some perspective. It's not a guarantee because, again, the banks are going to be the ones that are actually calculating that loan, but it gives you some perspective on what that looks like, okay? So now we've calculated the loan. Now, there's a misunderstanding that part of the calculation includes your rent and utilities. That is why you have to separate the two. Rent and utilities are eligible for forgiveness in 1106. They are not used to calculate the loan themselves, okay? That is very, very important to understand. So what do we need in order to calculate the actual loan? Well, for right now, in talking to the banks, we know we're going to probably need some tax filings. So you can go ahead and pull down your quarterly 941s for your payroll information. health insurance information, retirement contributions, and if you're a 1099, you'll need that as well when you go to file for yours, inclusive of that. So we know you're going to need those. Some banks are starting to say, look, I'm going to need tax filings on everything. Again, that's part of the process that they're going to find out from the SBA. What is it going to be required for us to actually calculate the loan itself? We don't know that yet. We just know sort of the general structure of how it's going to be calculated. A couple questions we've gotten inclusive of the Q&A as well. Number one, if you're in a partnership structure with multiple corporations that feed into that, some sort of affiliated or controlled group, we don't have guidance yet on that. We believe that you will be filing for one aggregate loan, but we do not know that yet. So in all likelihood, it's going to be one aggregate loan. Now, if it's going to be separated out, then you would be able to apply for one at the partnership level and then also apply for loans at the corporate level as well, okay? So when we talk about that's the 1102, let's go to the 1106 and we'll flip to the next slide and sort of understand what the 1106 section looks like. So this is where we actually go into the loan forgiveness piece. And there's a lot of confusion here. And so I want to clarify some of these things. 1102 says that you can take these loans, and the Treasury guidance that came out, you can take these loans all the way up through June 30th of this year if there's money still available, okay? What 1106 says is once you take the loan, the first 8 weeks that you spend the loan, you spend it on qualified expenses, and if you do, then you are eligible to be forgiven for those expenses, okay? That's very important because there's some misunderstanding out there that you actually have to spend the money before June 30th. The June 30th number, the date is in 1102. It is not in 1106. In 1106, it reads that you have 8 weeks from when you take the loan. So if your loan originates on May 1st, you have the subsequent 8 weeks to spend that. If your loan originates on May 15th, you can spend that all the way until July 15th, and you are still eligible for forgiveness. That is the way the law reads, okay? So we can take the loan through June 30th. We can spend it the subsequent 8 weeks. Now, what can you spend it on? The law originally said that you can spend it on qualified expenses. The Treasury guidance came out separately and said you have to spend it on qualified expenses, okay? So qualified expenses are those same payroll costs that we qualified for in 1102. So insurance, retirement, and salaries. But you can also spend it on rent, interest, and then interest on business debt, and then utilities as well. Now, what we're expecting, and again, we don't have guidance on this. So if you start asking the question of, well, what if I own my own building? How much rent can I use? Can I catch up my whole time? We don't have guidance on that. What we expect it to say is you have to have a lease in place before February 15th, and whatever normal business operating expenses for that 8-week period, you can spend it on that. That's one of the key things the banks are waiting on from the SBA. How do we track these things? Because if you're going to require that we forgive these loans, we need to know exactly what we are allowed to forgive on. So it's very important to understand that, okay? Now, on the business debt, that debt had to be in service before 2/15. The lease had to be in place before 2/15. So there's a lot of nuance here. And we have broken down as much as we can. I'm not going to spend all this time breaking everything down. But what I want you to understand is that 1102 allows you to take a loan all the way up through June 30. 1106 then provides for forgiveness for qualified expenses only, okay, up through that 8-week period, okay? Now, there is a qualification for forgiveness. You have to retain and maintain your staff. That is the reason these loans are being created. You've got to retain and maintain your staff. So if you lay off your staff and never bring them back, you are not eligible for the PPP forgiveness, okay? Again, it's very important to understand. You can still take the PPP loan, you just cannot be forgiven for it, okay? Now, there is an exemption buried in the law that says if you laid off employees for a period of time up through 30 days after the law being enacted, so that's going to be right around April 27th. So if you have laid off employees up through that period, as long as you reinstate them by June 30th, you are eligible for forgiveness on the loan. And there's a calculation that will go into there and basically say, well, how many employees did you have last year? And how many employees did you reinstate by June 30? And if you reinstated, it doesn't have to be the exact employees. All it has to be is the same number. If you reinstated the same number, you'll get that forgiveness. And that's another, people are saying, well, I can't use unemployment and the PPP loan. No, you can. The law is very clear on that. The Treasury guidance is also very clear on that. You can use unemployment right now. Once you open your doors back up, you get your PPP loan, rehire everybody by June 30th. You can spend that money over the subsequent 8 weeks and you're good to go. Okay. Very important to understand that. Now, what happens if you don't spend all of the money during that 8-week period? The remaining amount then gets amortized out over a 2-year period at 0.5% of interest. Now, there was in the law itself said that it was a maximum of 10 years and an interest rate not to exceed 4%. Many of the banks assumed that was the case. And now that's been backed down to 2 years and 0.5%. And we've got a very, very good summary on our webinar we recorded yesterday. I'm not going to go into it, but how banks get money and lend money, and why this is a very difficult thing for banks now to do, because their cost of funds is higher than 0.5%. And so for them to take these loans on for a 2-year period, if you don't spend all the money and it's not all forgiven, it can be very punitive for the bank. So we got to understand that if you start hearing banks backing away from this, that's one of the reasons why. I'm not going to go into all that nuance. We've already recorded some of that stuff and it's out there if you're interested at all. So that's kind of how this works. Now, a couple other quick things. So one of the biggest things that we're hearing is we've got to apply quickly because the money is running out. One thing to understand is that the purpose of these loans is to get small businesses back going. This law, the CARES Act, is not just written for dental practices. We have got to understand that. This law is clearly written for all small businesses. There are small businesses right now that are also fighting for their lives, that are still retaining employees. They are the ones that these loans should be for right now. If you are in a practice right now that doesn't have a full staff of employees, you probably don't want to rush out and take this loan, because you're not going. Remember, the calculation is 2.5 times your monthly payroll, and then you got to spend it over 8 weeks to get forgiveness on it. You're not going to be able to spend it all in that 8-week period if you're not fully open. And so understanding that, all the numbers that we have run and gone through, if you're not fully open when you take this loan, it's going to be almost impossible to get full forgiveness under this loan. So the key thing is if we rush out right now, kind of like the toilet paper and hand sanitizer rush that we had, if we rush out right now and grab these loans and we're not even fully open until May 15th or maybe June 1st or something like that, your proceeds are going to run out, because as soon as you take the money, your 8-week clock starts. So the Secretary of Treasury yesterday, Mnuchin, he came out and said, you can find it on CNBC. He came out and said, if we run out of $350 billion, we're going to go ask Congress for more money. Again, the bottom line is in the whole scope of things, Congress is trying to stimulate the economy here. They're not trying to take money away from us. So from a strategy standpoint, one of the best things to think about is when do I think I can actually use the proceeds from this loan? I think that's the most important thing. And what we're telling our businesses, even orthodontists, if you're not fully staffed, you probably want to wait to take this loan for a while. Now, many of my orthodontists do still have contract receivable and things like that coming through, and we can talk about that here shortly. But the bottom line is that you've got to understand that you want to wait as close as you can to take out this loan, to when you're opening up, to take out the loan. Then you can start to use the proceeds after that, okay? Originally, we thought that a lot of the banks thought that they was going to be under the traditional 7A program, so they were going to be able to hold or earmark funds. You could put your application in, sort of hold your spot in line, and when you were ready for your money, you could get it from that point. At this time, it does not look like that's going to be the case in the SBA banks we've talked about. As soon as you submit your application, your money is going to get pulled and your 8-week clock is going to start. So very, very important to understand your business, your overhead. Can you use that money up? Because that's a crucial point. Last thing I want to mention there very quickly, the loan application itself does state that if you take a loan right now under this program, they do an additional round of funding later this year. You cannot take another loan under this program through the end of 2020. That's on the 4-page application. So incredibly important to remember that timing is crucial. You've got to wait until you can maximize the forgiveness on that, because this may be your one shot under this program. There may be more stimulus coming. So that's really, really important to understand. So those are the big things, I think, from a strategy standpoint that we want to understand. Our advice is continue to stay consistent, as Judson started this whole thing out. You've got to protect the viability of your business. You've got to protect your employees, but you also have to understand that you've got to have a business for them to come back to. So using the unemployment system and this PPP loan in conjunction is crucial. Okay. Now, flipping to the EIDL loan, some people
before we go EIDL, do you mind if I pop in with a couple of questions, just because I think it'll be easier to do it now? Can you touch on the profit sharing? One question said, if my total profit sharing between doctor and staff is, let's say, $90,000, can I apply for that portion in the loan?
We don't know yet. So again, remember, it's going to be the 90,000 divided by 12 months multiplied by 2.5. First off, that's going to be the amount calculated on 1102. But we don't know how much out of 1106 you'll be able to spend and get forgiveness on. So that one is our assumption is you will be able to do the normal monthly amount, not the entire amount. But if the banks get squirrely on that, they may pull that out entirely.
Another thing I want to ask the question, I'll just restate it to make sure everybody understands, is the June 30th deadlines are, number one, for applying for the loan. Number two, for having your staff reinstated and for the forgiveness, the staff have to be fully reinstated by that time, or at least a portion to get forgiveness. You do not have to spend the money by June 30th. The 8-week period starts when you receive the loan proceeds, even if that date of receipt is June 30th. That's when your 8-week period to spend would start.
You're exactly correct. And if you're hearing otherwise, if somebody's telling you otherwise, tell them to go read 1106, because it clearly states 8 weeks in there.
And then, Hunter, lastly, before we jump to the EIDL loans, what are they saying about timing from today, from application to receipt of funds?
So they're saying originally it came out 24 to 72 hours, but the SBA lenders that we have talked to have said, look, yeah, I mean, once we are comfortable with the process, 24 to 72, but we don't even know what the process is yet. Again, we should be getting that today. So I'd say in general, plan on probably a week right now. And once we get into the system and we understand the process, they're saying 24 to 72 once that happens.
Okay.
So yeah, so let's dive into the EIDL real quick. Sorry, we got a lot to cover and we're trying to get through things as quickly as we can. So EIDL loans, which are the economic injury disaster loans. So a lot of questions on that. But listen, these have been open for a long time. And I think it's very important to understand, first off, that the SBA lender I talked to yesterday, she mentioned to me that right now they have over 1 million applications for these in the system. This is run out of the SBA. They only have a few thousand employees. It's going to take time to get this money, period. Okay. Now, there is a lot of misinformation out there on can you take a PPP and an EIDL? Okay. You can. The law states, CARES Act states in 1102Q that you can take both. You just can't spend the proceeds from the EIDL loan on the same things as the PPP loan. That's incredibly important. So what we're recommending is when you take the proceeds from the PPP loan, you put it in one account. The EIDL loan proceeds go in another account, okay? So that's very important. Now, that EIDL loan does have a grant that was announced with it, a $10,000 grant. What's important for that grant is that that grant cannot be forgiven and you cannot receive 250% forgiveness under the PPP program. You only get the 250% or the $10,000 grant and then the 250 minus the 10,000. You can take both. You just can't get forgiveness in total for both. That's very important to understand. The things that I would say here is if you're in need of long-term cash flow, if this thing continues to extend out, this is a great way to make sure you kind of have that cash flow. The 30-year notes, 3.75 backed by the government. They are much more complex to apply for. You apply at SBA.gov, but again, there's a lot of misinformation. You can use both loans. You just cannot use them on the same thing, okay? So that's a little bit on the EIDL loan. I want to roll very quickly over to the Families First Coronavirus Response Act. A lot of words there. This is the original, the 14 days PTO and the family medical leave. Now, understand that you will be subject to this beginning today if you have employees. Now, the guidance is showing us from the Department of Labor, the guidance is showing us that this employee has to either get the coronavirus or have symptoms so that they're in quarantine or isolation. And the kind of theory behind it is that you would then pay 14 days of their pay while they're in isolation or quarantine while they recover. Okay. So if your office is closed and your people are on unemployment, you are not subject to this. That's very important to understand. Okay. You are not subject to this. That is consistent with our advice on why we said we need to go to unemployment. So we're not subject to this. Now, if you do have employees working part-time for you right now, they will be subject to this if they fall under the rules as stated here in Department of Labor. Okay. It's important to understand you would then have to pay, and there's a lot of calculations with it. I'm not going to go through them, but you'd have to pay 14 days of their PTO, and you cannot pay that from your loan proceeds from the PPP. You have to pay the 14, but you cannot pay from the PPP. You would then receive tax credits. We don't necessarily know how those are going to be calculated yet, but you would receive tax credits that would make you whole dollar for dollar. So really it's a timing difference. You had to pay it now and you don't get the money back for a few months. So if you're cash flow tight, this could be a risk to you, okay? If you do not rehire your team though, then you will not be subject to this. So here's the important thing to think about. If you go out and apply for this loan and you have a part-time team right now, you rush out and get this loan, you bring your team back, even in a part-time manner, in order to exhaust all of the money and get it forgiven, you would have to pay them their full salary. If one of them became infected or sick, you would then be subject to this and you couldn't use those proceeds to pay for it. So now you're losing more of your money that would potentially be forgiven because you're having to pay for that out of pocket. Right? So are you tracking with me? What that means is you're going to potentially lose some of that forgiveness on that loan and essentially lose the opportunity. It's an opportunity cost. Whereas if you use the unemployment system until you're fully open, when you open up, grab your PPP, which you can then use because you have a full team. At that point, if the FFCRA comes in and you get somebody that's sick, then you're paying them, but you have cash flow coming through, right? So very important to understand. And for you as orthodontists, putting these pieces together and understanding what do I have coming in for my contracts receivable? What do I have running with my team right now? Maybe I'm doing virtual consults, and how does that all fit together is absolutely crucial to make sure you maximize what the government is giving you here, okay? So I'm gonna leave it at that. This law is going to be in place through 12/31. So even when we get back started fully, this could still be in place. I'm gonna leave it at that so we can get to some other stuff though.
Okay, so, jumping away from the CARES Act and the different loans, one of the things that we wanted to touch on is kind of a 90-day cash flow plan. We felt very early that this thing may be extended longer than, a month, and it sure is seeming like that now. And so we want to talk to you guys a little bit about, what things you can control, going back to that first slide. And one of the things you can control are the expenses that you have both in the practice and personally, and cutting any expenses that you possibly can to save cash during this time. So first, let's start with the business. And we break, because we're accountants, we break these down into 3 different sections, okay? Number 1 are fixed expenses. The expenses that you really can't get out of in the practice. One of those is rent, okay? Now, if you own your own building or can talk to your landlord, one strategy many people are using is to try to defer the April rent payment and make that up in the future once we get the loan proceeds from the PPP. We don't know if we are going to be able to use and be forgiven on rent that has already been accrued, but that may be something that you can do, because even if 3 months are not forgivable during that 8-week period, you can definitely use the money to pay for it, okay, if you need to do that. Utilities, obviously, those can vary based on usage, and if people aren't in your office, those can go down. Insurance, we talked a little bit about health insurance, but those are pretty fixed expenses. Advertising, this may be a good time to go through some of your advertising costs and maybe cut some of those things that you don't think are effective. But for many reasons, there may be advertising costs you don't want to cut during this time, because you do want to be able to be in full swing and still have those patients coming to you. There may be people out there that are still thinking about orthodontic treatment. You want them to be able to find you and be ready to come in to see you once your practice opens up again. And then lastly, your loan payments are obviously fixed expenses. What we will tell you though on loan payments is that we do recommend that if you haven't already, that you stay in contact with your lender. Many lenders that we've worked with, in fact, most all of them have had a period of of delayed principal payments. We've seen interest-only payments being allowed for anywhere from 30 to 90 days. Secondarily, if you currently have an SBA loan, then we are under the understanding that SBA payments will be deferred for 6 months under this new law. So that may be a way to reduce the fixed loan payments you have. Credit card payments, there are some credit cards that have allowed for putting off one payment and no interest for a month. So that can be another way to save cash and put off some of those expenses until you're able to get some of these funds. Outside of fixed costs, then you have your variable cost. Staff, we've documented well what our recommendations are for staff. Your staff costs should essentially go away. We've also recommended to our clients, excuse me, that they suspend their salaries, not only for themselves, but for spouse and children as well. If you need money out of your practice, this is a time where you can take just a distribution check from your practice. Because if you run payroll through your W-2, you are paying payroll taxes and likely federal and some state taxes that you can defer to the future, okay? Especially your federal and state taxes, because if we're out of the office for a period of 30 to 90 days, we know that your projected taxes are likely going to be different now than they were before this closure. Supplies and lab expenses, you may have some suppliers and some lab that you still need to pay from previous working months, but those should cease. If you're not doing production, those should cease, as well as merchant fees. If you're not running any new production through, then obviously you're not going to have merchant processing fees, with the exception of the ongoing payments that you will still have continuing to come into your practice. And then lastly, in the business, you have discretionary expenses. Many of these things are automatically going to be ceasing as well, because you're unlikely to be traveling, you're unlikely to be making equipment purchases. You can still run some meals through if they are business related, but those are going to go down as well. The main point here is that we want to limit the amount of expenses in the business to the best degree you possibly can. Moving on to the personal, let me go back. By going through each of those categories of expenses, you should be able to come up with a number that you know that you are going to be spending over the next couple of months. Even if you have staff on at a lower level, you can calculate that and you know what your spend will be over a 30, 60, and 90-day period within your practice. Moving on to your personal side, you also have fixed, variable, and discretionary expenses. Obviously, many of you have time on your hands. It's probably a good time to address some of these things with your your spouse and your children. Obviously, mortgages are one thing that you can't get out of. We have not heard of any wholesale changes with Fannie and Freddie or any allowances. But this could be a good time while you have time on your hand to review the rates of your mortgages and potentially refinance. If you do refinance, if you can save on the rate and you can get a refinance done, that may get you out of one or maybe even two mortgage payments. Obviously, you wouldn't want to do that and spend the money unless there is a rate differential, but it's a great time to look at that. Your utilities, obviously, you want to keep the lights on at home. Insurances are ongoing. And then any other personal loan payments, you may be able to get the same type of deferred principal, just like we were talking about on the business. Your variable costs right now have likely gone down as well. And variable being, maybe your groceries, dining out, things like that. Again, I won't go into each one of these categories, but if you break down your needed expenses at home, the expenses that you may be able to delay, you may be able to get your home budget down to a much more manageable level than it was when you were making money and not concerned about the level of cash flow. So if you can then budget for what your needs are on personal, what your needs are to keep the doors of the business open, then you have exactly what you're going to need over the coming months until we can get your practice rolling again. Okay. So if you can create that outline of your needs, then we can move and we can talk about the cash sources that you have. Okay. So obviously the easiest source of cash that you have is the cash that you currently have in your business operating or business savings and personal checking and personal savings accounts. If you have a decent amount of cash, then you can look at those needs and compare it to the cash that you have, and maybe you feel a lot more comfortable about the coming 60 to 90 days. The second thing that stands apart in orthodontics compared to any of our other specialties is the fact that our orthodontists have their contracts receivable that they've built up over a period of time. I'm actually going to kick this over to Hunter because he's been having some really interesting conversations with OrthoFi and has some statistics. So Hunter, you want to take this over a little bit?
Yeah, I think, I think when we start thinking about orthodontics, it's a little bit different. I've had this conversation, so we work with about 450 orthodontists at our firm, and it's a little bit different when we start talking about this time frame. And I've heard from many of you, oh man, thank goodness I'm an orthodontist because I've got my contract receivable. And absolutely, especially with the shift that we've seen over the past 3 to 5 years with, well, not even 3 to 5, maybe 2 to 3 years with extended payment plans. Obviously, lower down payments, throwing more into contracts receivable. So we tend to see that our practices, our orthodontic practice, have about 60% of their 12 months production sitting in contracts receivable. So that means for $1 million practice, you've got about 600,000 in contracts receivable. And so I've started conversations over the past 3 weeks, really, with a lot of the different ones out there that have the data, whether it's OrthoFi or Simple Consults or OrthoBank and these others that have the data behind to understand, okay, what should I expect during this time? And thus far, when talking to OrthoFi thus far, they've said, hey, look, we haven't seen a huge decline in, auto drafts coming off of actual ACHs. ACHs or auto credit cards or anything like that, where you've got the information. Their rate has historically been 90% and it remains at that. Now, I think as an advisor for my orthodontic clients in particular, I'd probably look at it and say, okay, if we stay at 90 days or a 90% collection rate on auto drafts, and we do that for the next probably 30 days, because we know this is probably going to continue into the summer as far as the virus goes and the shutdowns and delays and things like that. And so if we say, okay, if we're talking about cash flow planning, maybe we take that as an example. So we go look at our auto pays and we say, okay, if we've got 90% of our auto pays we're collecting ongoing. Let's say we do that for 30 days, and then maybe it drops to 80 and then 70. As you're developing this plan for 30, 60, 90 days, I think it's incredibly crucial to look at that. The next slide's really interesting because what this shows is, and this is courtesy of OrthoFi, but this basically shows what a cash or a payment erosion looks like in their eyes right now. If you're a customer of OrthoFi, you may have seen this as well. I think this is a really helpful illustration. So you've got obviously these different sources that sort of flow into your business. You've got your same day cash, your insurance, and then your patients as well. And so, their same day cash obviously is going to dry up within 1 month of this whole process. Some of you even doing virtual consults right now are probably seeing that same day cash dry up at this point because you can't charge because you can't get brackets on people, right? And so that's starting to dry up. You do also have that run of initial insurance payments, which typically goes, 60 to 90 days. So you may still be getting some of that. And then you've got that insurance continuation, which their average insurance continuation is about 12 months. So that should continue for the better part of this time until we get a vaccine or whatever else happens. I'm a CPA. I'm not a medical person. So, and then the biggest piece, which is those patient monthlies. And those are those numbers that they're talking about as far as what they're seeing. And obviously it's more valuable than ever than having to have those sort of understanding of what the auto payments are. So what I would encourage for all of you is to go in and say, okay, let me pull down what my automatic drafts are and start to do an analysis as you're going through the things that Judson talked about. Start to do an analysis of, okay, how much do I think I'm going to collect 30 days, 60 days, 90 days? Because not only is it getting through this period, but now we got a problem because our contracts are dwindled and we got to build it back up. But we should have those cash, same day cash payments starting to come through and that insurance cash coming through as well. So to a certain extent, I think it's helpful what's happened in the industry where we've built this contracts receivable base, because this is going to get y'all through the next 30, 60, 90, but be very cautious as you look at that, because you know the subsequent 3, 4, 6 months is going to be tough as you work back up. So helpful numbers and some illustrations for all of you.
Okay, jumping back into some other cash sources, if you need them, business lines of credits or home equity lines of credit. For business, many banks, if you have a relationship with them, can approve a line of credit for up to $50,000 that's unsecured very quickly. Okay. And so that may be somewhere that you could go get approved for that now, and have the ability to draw on that if you need it. Home equity lines of credit in most states, you can take a home equity line of credit for up to 80% of the value of your home. So if your mortgage is less than 80%, you may be able to access a home equity line of credit. The only issue with the home equity line of credit is that it takes some time. A lot of the home lenders, we were talking about refinancing earlier, pretty backed up because rates have been so low. So that may be something you want to start on sooner rather than later if you don't have one and think that would be a good idea for you. Again, unsecured line of credits are usually more quick than secured lines of credit on the business or personal. And the last one I want to touch on is 401k loans. If you have a 401k plan, the first question you have to ask yourself is do I currently have loans available under my plan? If you don't, then you can easily talk to your pension attorney or 401k administrator. Usually you can get those provisions added very quickly. This could also be an additional way for your staff to get money if they have vested balances. The rules before all of this hit were that you could take a loan of up to 50% of your vested balance up to $50,000 and pay it back over 5 years at a rate that's about 1+ prime. So that's 4.25%. And it goes back into the 401k as earnings in the 401k plan. So that's not a bad thing. Under the new laws, they have extended the loans in 401k plans up to an amount not to exceed $100,000. So, if you and your spouse have a very good balance in the plan, you may be able to access up to $200,000 from your 401k plan. Now, we like the other loans better right now, frankly, because if you're taking money out of your 401k right now as a 401k loan, you're doing so post this stock market sell-off. So you're doing so at lower values than number one, you clearly had 3 to 6 months ago. And we do expect at some point that will rebound. And typically when stock markets rebound, they do so very quickly. So you may be losing out on the opportunity of that rebound by taking money out of the 401k plan. But if that's your only source of funds, it still can be a good place for you to access those funds if you need it to keep your business going. You have non-cash accounts that can be 401ks. There are expanded hardship rules, looking at your HSA for any medical costs, 529 plans for education costs, and then Roth IRAs. Obviously, taking money from those accounts, even with some of the new rules that will help you do that, are again not our preferred places to get money during this time. You can sell personal stock brokerage accounts right now and access money through there. Kind of the same thing we talked about before is that you have to consider the investments within that and whether you want to sell right now at a reduced value. We talked about decreasing tax payments through payroll. And Hunter's going to talk a little bit more about some extended deadlines on when taxes are due for last year anyways. And we've talked about deferring loan payments, all of which are good places to go. So combining your cash needs that we talked about with your cash sources, you can come up with a plan even outside of these PPP and EIDL loans, which we don't really know when those are going to come through exactly. You can design a very good path to get you through the next 90 days. Now, Hunter, I'm going to let you take this last slide to determine your priorities.
Yeah, I think, prioritizing it's the key, right? And Judson's done a great job of kind of walking through what our different options are. And I would encourage you at this link, we have created a one sheet that helps you walk through this with your staff or your spouse. And I really encourage you to write these things down and go through and say, where are our needs? Where are we getting value right now? And where do we feel like we're not necessarily getting value and we may need to cut some things? And so I think that's really, really important to go through. Then you've got to figure out your priorities, and you've got to design that. And so, first off, obviously you've got your necessary business expenses, those things that you've not cut because they are helping you in the practice, or, paying your rent or whatever else it is. And I'm going to talk about how you use the ordering here in just a second. And then obviously your personal lifestyle, which Judson's gone through after cuts. I think that's important. Now, the law has extended tax extension payments for 2019 out to July 15th of this year. So if you owe taxes, normally you pay that April 15th. And right now they've extended that to July 15th. Your first quarter tax payment for 2020, if you pay estimated tax payments, that's also been extended to July 15th as well. Now the quirk here is that your second quarter payment is still going to be due June 15th. So I think it's the first time ever where our second quarter payment is going to be due before our first quarter payment. So really for tax purposes, if you think about that, you're in all likelihood with this lower year of income, you're in all likelihood going to have less taxes. So you could get with your CPA to determine, okay, how much do I actually need to pay on June 15th, or can I just wait to make that first quarter payment on July 15th? That's a personal decision, obviously. And then you've got your IRAs for 2019. So those are personal IRAs. That's been pushed to 7/15 as well. And then all your qualified retirement plans. So your 401ks, your SEP IRAs, your simple IRAs, your defined benefit plans, all that's been pushed to 10/15. So you've got to look at those things and say, what do I need for my business, my lifestyle, and then how do I maneuver these pieces together to make sure that I can get all the things done while using the sources that Judson went over. And then at the end, still have working capital left, obviously, when I reopen the business. And again, I think to a certain extent, because you're orthodontist, you will have that cash flow continuing to come through. So you've got to build that into your plan as well. And this is look, you got time. And this is one of the best things you can do with that time is sort of designing what does this 30, 60, 90 look like for you in particular. Now, I've gotten the question a lot, okay, well, how do I flow all these together, Hunter? If you have not received your EIDL loan yet, you are likely not going to receive that anytime soon because the application process is so backed up. If you have received that. I got a couple questions on how do I know what I'm going to be even eligible for? You won't know until you apply and you meet with your SBA representative, and then they go through that with you. But if you've not got that, I would not count on that. So right now, what you're looking at is while you continue to wait to open your doors back up, and I agree with somebody that posted that we're probably talking mid to late May at this point, maybe with restrictions set out by your dental board, dental society, something like that. If you expect that, you've got your cash flow coming through right now because you still should see some pretty good auto pays coming through. The next thing you'll probably want to use is you're going to want to use those lines of credit. And you'll have to balance the home equity and the business line of credit together. You want to use those to sort of assess these things that I've laid out on making sure you time those up. Then when you reopen your doors, you strike on that PPP loan. That's going to help you get phased back in for a 2-month window. That's why that loan is designed that way, is to help you phase back in. So then you would use that, and then your EIDL should come through later on, if not in the interim. So really it's using those lines of credit well, flowing into the opening of your doors with the PPP, and then the EIDL after that. That's going to be my general recommendation for most of my clients as we talk through it.
Okay, last few things I wanted to touch on before we got to a few more questions is, what are some of the things you can do right now while your business is shut down? Number one, as I've talked to my clients about, I think one of the best things you can do is stay connected. Stay connected to your patients. Stay connected to your referring doctors, and stay connected to your staff, which I touched on earlier. Through this social media platform, these social media platforms you have now, there are great ways that people are finding to stay connected to their groups. Okay. Heck, my daughter at 8 o'clock this morning had a kids worship time with the music leader of our church. There's been online dance classes there's been all kinds of stuff, and you guys should take this time, I believe, to stay connected to your patients. Be lighthearted, be funny, be creative. Be you, represent what your practice is to your patients. And I've seen a lot of my clients do a lot of fun, different things, even sending little games to their patients and things to create some good family time and questions and things like that. So do that. Have Zoom meetings with your staff. Maybe you could even do a virtual happy hour with some of your referrals to stay connected with them. People are yearning for connection right now, and so be that person for them. The other thing I would highly recommend you do, I know that a lot of times, especially seasonally in orthodontics, you get to a point in time where you're seeing so many patients, you feel like you have no time to spend really developing your business. Well, guess what? You probably have some time now. So I would highly recommend that you spend some of this time to get back to some of those things and maybe working on some of the systems or refining your marketing or working on your conversion rate or whatever it is. The things that maybe you've wanted to do on your business, work on those now so that you're the best you can be when you come back to work. And then once business resumes, you have some work to do, and you can think about this in advance as well. Hopefully there will be a point in time where we can just turn the spigot back on and get rolling as fast as possible. And what does that look up? How do you meet the pin-up demand of not only, doing all of the checks and getting people in for their ongoing appointments with hopefully what's pin-up demand for new patient exams. And so maybe that means extending hours for you guys or having some days that are new patient exams only, because I think that's really important. Obviously, you guys want to produce as much as possible. But one of the things that Hunter talked about was, hey, you have the opportunity as orthodontists to rely on some of that contracts receivable over the coming 60 to 90 days. But what that also means is as you collect that money over the next 60 to 90 days, is your contracts receivable is going to be much lower once you come back to work. So the quicker that you can meet that built up demand and produce, the quicker you have the opportunity to get that back into place. Because, frankly, we don't know what's going to happen with the future. Will we have another round of infections in the fall? Will we have staff that are out? And we have to seize the opportunity when we have it. So, use this time to really refine your business for when it comes back. Hunter, any more thoughts on that?
No, I think that's excellent.
Okay. I know we've had a lot of questions. There's no way that we can get to all of them. And I'm sorry for that. I think that Todd may be logging back on or unmuting himself to answer a few of them. Is that correct?
You guys have visibility of them, Judd and Hunter, correct?
Say again?
You have visibility of some of them. I think what we could do is probably 15 minutes here and try to answer as many as we can.
Yeah, sure. That's great.
Okay, Hunter, do you want to just go through and start popping off on some of these?
Yeah, that would be great. There's been quite a few. You can apply for the EIDL and the PPP at the same time. There's a lot of that. And again, remember the CARES Act actually says that you can actually do that. There's been a lot of questions about whether or not you can, when you'll hear back on the EIDL. And that again is the one that listen, I've got people that applied 3 weeks ago and have still not even heard anything from the SBA. So just know that is going to take time, and that's why I sort of went through that sort of flow of how your money should be spent.
Todd, some of these questions are clearly things that we have answered. Some people said they had to get on late. Can you address whether this is going to be posted somewhere for the participants to watch or rewatch?
Yes, we are. This presentation has been recorded. It is being recorded, and so it will be available. I think just pending approval from Kane Waters, and I'm not sure, Mark, or you guys. I don't know where that will be located. Will that be on the Kane Waters site or American Orthodontics, or both?
We'll be working on that, Todd, but we'll send a message out.
Perfect.
So there's been some questions about the loan origination date. We believe, again, that'll come from the SBA guidance, but we believe that will be 8 weeks from the day the money's pulled. But what they're saying right now is that the money will be pulled about 24 to 72 hours after the application. So just know you can't necessarily time that. There's been some great tips in here about where you can get different stuff people have had some success with. Some questions about suspending the W-2 for the doctor and spouse. I mean, during this time when you're not making, when you're not doing production, absolutely. That's one of our recommendations, is to suspend the pay, because really your pay is going towards payroll taxes, federal and state withholding, and then obviously funding your 401k as well. And then you have the net, but most of you are operating in an entity where you can pull some draws and distributions for your lifestyle. Save those taxes right now, because the government's already said, hey, look, we're not looking for those things right now. And the fact of the matter is you're not making your full amount, even with contract receivable coming in. So save those taxes. And if you're eligible in your state to file for unemployment, then you should do so until the PPP loan comes through.
One question came up related to the FFCRA, the extended FMLA, that said, if your staff are still coming in on a part-time limited basis, would they still be eligible for the 2 weeks of leave if they qualify under one of the of extended FMLA? They get sick, or caring for somebody that gets sick. The answer is yes. But if you have furloughed a staff member that works 36 hours and then you've rehired them at 8 hours per week, then their 2 weeks of leave is 16 hours, not 80 hours, if that makes sense. So because you've rehired them on a new basis, their leave is calculated differently than if they were still hired at that 36 or 40 hours per week.
Yeah, there's a question in here. If the forgiven PPP money will be a loan at such a low interest rate, why not just the unforgiven, why not just get it now? At worst, it's an inexpensive loan. Absolutely. I mean, the thing to understand, though, is that the program is established to really maximize its benefit with the forgiveness piece. So if you've got team on unemployment right now and you're maximizing that piece of the CARES Act, and then you were able to come over top with the forgiveness piece on that, on the PPP loan, that's maximizing both of them, right? Versus taking the loan right now, not having some of it forgiven, and then potentially being at risk that you're still not open June 15th when the money is no longer there and you can't spend it on staff or whatever else it is. And then you wouldn't meet that June 30th deadline if you had to put your people on unemployment after that. So really it's understanding how you can use both of them together really, really well. So there's a lot of questions in here about when are we going to get when are our staff going to get the 600 pandemic benefit? We don't know yet. The states don't know in our conversations with them as well. There's some questions about the PPP. Can it go retroactive? No. It will not be available retroactive. You cannot spend it on retroactive expenses. Now, we don't know yet if you deferred rent. So let's say you didn't pay your April rent payment because your landlord deferred it, and you pay April in May, and May in May, and then June. So you'd have 3 rent payments. We don't know yet if you'll be able to get that forgiven as well. Our assumption is it will only be normal monthly business operating expenses because the bank has to certify the forgiveness piece.
And one question relates to what can you spend the PPP money on? if you don't have a certain number of expenses for salaries or rent or et cetera, there's once you get approved for the loan, it's going to be in your account. You're going to be able to spend it, frankly, on whatever you want. It's only that you cannot get it. You can only get the loan forgiven for those specified expenses. So if you have that 8-week period and you spend 80% of the loan on the qualified expenses, and you have 20% remaining that can't be spent on those expenses, you can frankly use it for whatever. Just know that if you spend it on non-qualified expenses, it's not eligible for forgiveness. So you can also pay that back at that time so that you essentially get 100% of the loan paid off.
There's a question in here about what guarantee are we going to have that the Treasury will not run out of funds? Do you have a way of tracking that? I don't have a way of tracking that. I'm nervous to miss it. I mean, I think we could probably reasonably assume that at some point we'll start hearing some stuff coming out in the newspaper, sort of promoting the success of the program. Oh, they've already given away 150 billion of the 350 or something like that. I don't know that there's not going to be a tracker necessarily on Wall Street that shows that by any stretch. I mentioned earlier that Mnuchin came out yesterday and said that if the 350 goes fast, then they fully intend to go to Congress for more. Doesn't guarantee that there will be. But again, I think understanding the broader scope of things is very, very important. The federal government is trying to get the economy through this. And so if that money runs out quickly, I would imagine, again, and this is what Mnuchin's saying as well, I would imagine they're going to come up with some more money to make sure that we can get through this, right? I mean, that is the biggest thing that they're trying to accomplish from that. So we don't have assurances by any stretch, but that's the best that we know as far as the global perspective on it.
Yeah.
Oh, sorry. There was a question. This is a good one, Judson. Maybe you want to answer this one about, Zooming with employees who've been laid off. Could this be considered on the clock time? And there's tight labor laws.
Technically, probably yes. If you want to have a staff meeting to keep people connected and it's an hour long, you can choose to pay them. Remember, whatever your employees make in a certain week, they're going to be reporting weekly to the unemployment agency. So if you bring people back for 4 hours a week and you split it up amongst all your staff, they're going to be reporting that to the state, and the state then calculates what their state benefit is. So if you want to have a Zoom meeting, then you can call it a business meeting, or I think you could probably call it a social event, and those aren't required to be paid as well. So I think you can go either way on that one.
Yeah, and obviously make sure it's an optional meeting for sure. So.
Yeah.
So Kevin, you said, is anybody looking at the Q&A? Man, we're trying to get through. These are all the same questions our clients are calling us with all day long. So we apologize we can't get to all of them. Okay, here's a great question that I've gotten. So associates and PPP. So if you have associates in your practice, how does that work with PPP? That's a great question. Let's talk about that real quick. So if your associates are W-2, then they're going to be included in that maximum loan amount. Okay, so they're going to be a piece of that 2.5 times multiple calculation. Now they will be capped at the 100,000, just like you if they make over that. So they'll be included there. There is some confusion out there about what happens if your associate is a 1099. Now the way the CARES Act is written, that 1099 actually goes in your PPE calc as well. So you would get the 2.5 times multiple, and then you would effectively pay that out to the 1099. So at $8,333 a month is how that would work. So that's a very important distinction. Obviously, the government is not going to allow you to file that 1099 your PPP loan and then the 1099 to also do so. The way the CARES Act is written, though, it should be filed under yours. So that's a great question.
The federal unemployment benefit of the extra $600 is through July 31st. It is not state specific. So in the case of one of the questions in Florida, it says 12 weeks. That 12 weeks is April, May, June, July. One other question is there's some confusion about, can we get forgiven the grant through the EIDL loan of $10,000 and PPP both? No, in this case, you can't have your cake and eat it too. If you get the idle loan of $10,000 and you utilize it, then your maximum potential forgiveness on the PPP loan will be reduced by $10,000. So you can't get both.
There's a good question about, does the idle have qualified expenses like the PPP? Can we use idle funds to pay the note on the practice, which may have a much higher rate? So the way the idle is structured is it's supposed to be for normal operating business expenses. And so it's things that you would normally have, and you could use that for advertising or your supplies, with American Ortho or your lab or whatever else it is. Now, as far as paying off the note, you cannot, from our understanding, you cannot pay off the entire loan. So if you've got a loan, that's not the intention of it. The intention is not to refinance your debt for 30 years at 3.75%. And there's some pretty strict fraud provisions in there if you do things with the money that you're not supposed to. There is some confusion, and this is not clear. It's very unclear, and it would come when you actually listen. Nobody's actually gotten these idle loans yet. Only a handful of people have, and if you are, count yourself lucky on it. There is some confusion on it, but our understanding is you can pay your monthly debt payment. Now, again, that is not clear by any stretch, but that would be best case, but you cannot refinance the loan.
Hunter, here's a question that you should answer is, when you go back on payroll, when you're in your 8-week period of repayment or of utilizing the PPP funds, since our doctors' incomes are capped at $1,000, or the wages are capped at $1,000, would you consider raising your spouse's salary to spend more of that money?
Yeah, so the doctor's capped at $100,000, and we don't know yet on the guidance. I mean, certainly that's a strategy, right? Is to raise your spouse's salary to help make up some of the difference and eat it into that. Again, the theory on the loan, though, is that it's the normal ongoing 8 weeks of expenses. And so there may be, if the banks do some digging on the actual filings, there may be, a cap on what you can pay for the spouse, but that will be coming with the SBA guidance.
Yeah, I think the answer really is at some point they're going to have to audit the amounts that you are going to get forgiven. And so, it very well could be that something like that could be caught under audit and not allowed to be forgiven. I think that we just have to wait for guidance on that.
Yeah, and there will be some sort of percentage, I'm sure, increase too. So there's one about separate accounts. I mentioned this briefly, but maybe I glossed over it very, very quickly. So yes, we would recommend that you have separate accounts to make sure that what's coming out of the PPP loan is spent on qualified expenses under the PPP loan program. And then the idle loan would obviously go somewhere into a separate account as well. So those are not commingled with existing business cash. So good question.
We're getting very close to the end of our time, guys. And, I know that we weren't able to hit, all of the 100 and something questions that are out there. And I wish we could. But as Hunter mentioned before, all of the information, all of the webinars, everything that we have done for our clients in the past is on our website. If you go to canewaters.com, you will find our COVID-19 blog, really going back into mid-April, and all of the things that we have posted out there. We do highly recommend that you go out there, watch the webinars. A lot of those webinars, like Hunter mentioned on the CARES Act, even are a lot more technical than what we were able to get into today. So you will find useful information out there if you have not already.
Hunter and Judson, this is Todd again. Just saying thank you. This was absolutely outstanding. I'm sure all the doctors that participated found this incredibly valuable. Again, we can't thank you guys enough. We are thrilled with our partnership with you and the value that you bring to us, to orthodontists in general. Not only through these times, but all the time. So thank you. And again, to the participants, this will be posted. It looks like Aaron responded, it'll be on the Cane Waters website. And I'm sure we'll have some type of link to it on the AO website also. So Thank you for all the participants, and Hunter, and Judson. Thank you for your time today and your expertise.
Yep. Thank you, guys.
Thanks, guys.